Hey guys, what's up? Alec back with the daily stock market, and today we're going to be talking about dividend investing. We're going to be talking about my 5 top dividend stocks that I'm invested in personally. We're going to be talking about price points to buy these dividend stocks and if it makes sense to be a dividend stock investor for you. What happens is people hear about dividend investing, they think it's the greatest thing in the world, so they start revolving their entire investing strategy around dividend stock investing. And I can tell you that's not the best way to do it. You kind of have to think of it more of like a bonus or like a reward for staying with the company for so long, because when you start focusing on dividend stock, you forget about all the other important aspects that make a good stock in the first place. And sometimes you just focus on what stock pays me the highest dividend, even though that's not the best route to go. Okay, so one of the first stocks on the list that I invested in is actually an ETF. It's SPYD, SPYD. And this is one that mimics the S&P 500, but it adds in a high dividend yield. I was buying this one heavily around $25 per share. I have a lot in my retirement fund account. And if we look at the stats, you can actually see the 30-day yield is 3.9%. So that is huge. The PE ratio is 41, which is really good. And the average volume is a pretty large ETF for a dividend-paying stock, one of the more larger ones. Now, personally, I would want to buy this one right around $30 to $35 per share. I think is the best point to get into them. And I think that they will go that low again. It's just a matter of time. So make sure you set your price alert. All right, so next up we have AT&T, and this is one of the go-to ones that most people think about when they think about dividend investing. As you can see, they fluctuate up and down, and right now they're at a pretty good support. So they're made the list mainly because, yeah, they're the one that everyone thinks about, but they're at a good point to buy. You know, a lot of people were asking me in November, should I be buying at $35, $40 per share? And I was not wanting to buy right around that price. So it's a good thing you did not buy around $35 a share back in 2019. And recently in April, 2021, they were at 32, almost $35 a share again. So for them to be at a 52-week low and closer to that 52-week low, which is 26, they're at 28. I think between $25 and $28 is a great place to buy AT&T, and you can easily sell at $35 again. And look at that sweet dividend. You get 7.1%. So while you hold and you're waiting to swing trade them and ride it back up to $35, if it takes a little bit more time, you get that 7% dividend yield per year. And remember, you always see dividend yield basically means per year. You can think of it as 7.1% per year. And the market cap's a huge company. We all know about AT&T, so they're a great one to consider on your dividend stock watch list. Now, after that, we have one of my favorite long-term dividend stocks, and you actually can see PG, Procter & Gamble, and they're only a 2.3% dividend yield. But the good thing about this one is, look at that, last year they've already gained 12%. So on top of that 2.3% dividend yield per year, you're also going to be getting around 8 to 12%. They've been getting it consistently. And look at that, in the last 5 years, they're up 62%. Now, that's a great, safe company. This is not a risky investment. The 52-week high and 52-week low are very close to each other. So you can think of this one more of like a money park. You're not going to lose all your money tomorrow. And the stock's not going to fluctuate by a huge percentage, kind of like some of these other growth stocks. When you lose 30%, 40% of your portfolio, it's not going to happen with something like a PG or some of these. And that's the good thing about dividend investing. They're a little bit more secure. They don't fluctuate as much as growth stocks is the great thing about them too. Now, personally, for PG, I'm dollar cost averaging into them for long term. But if you want to start a position, I think a healthy place to get in is right around $115 per share, as low as $100 per share. Now, there is no telling that they will go that low again, because they're a great company for the long term and a great fundamentals, and they have been growing consistently. Now, since we talked about AT&T, we also have to talk about Verizon. They are at a good price point right now, also $55 a share. And I actually have a video where I break down AT&T versus Verizon, so I'll link that in the description below. Make sure you check that video out because it didn't get a lot of love, and it's actually a pretty good video where you can see which one's better for you, Verizon or AT&T. But with that being said, Verizon doesn't really move much. You can see the 52-week low is about $53. So it's pretty close to the 52-week low. It might be a good idea to start loading up as like a money park. Kind of the same thing that we've been talking about. You know your account is not going to fall a drastic amount. You know you're going to get that dividend, that 4% dividend per year. The PE ratio is really good. The market cap is really good. So you're not going to get explosive growth. You know, you're not going to see 30%, 40, 50, 60% growth with something like a Verizon, but you're also not going to see that 40%, 50% losses either. You know, the most you'll lose, especially if you buy closer to that 52-week low, you're very less likely to lose when investing in a stock like this at a 52-week low, because the most you'll probably lose is like 10%, if even that. There's higher chances that you'll actually make money and it'll go back closer to the 52-week high, which is around $61. And you'll make like 10% gains with a 4% dividend, which is about 14% per year, is what I project that something like a Verizon can actually bring. Now, obviously, I want to buy closer to that $54 or $53 mark, but I'll start buying some of Verizon just to show you guys, just as an experiment, that it's pretty safe. We'll just throw $500 into something like a Verizon here as a money park, a nice safe investment. I'm not really scared that $500 is going to go away. And I'm sure when I return, and I'll probably honestly move that $500 to one of my longer term accounts instead of having it on my Robinhood account. But I just wanted to show you guys that that's something that you can do with something like a Verizon or some of these stocks on this list. You don't have to be afraid to put a larger amount of money into something like one of these, because it's not going to lose a bunch of money. The investments are pretty safe with the ones on this list, but you're not going to see that explosive growth that a lot of you are obsessed with, I know. After that, we have Coca-Cola, and we've been stocking up on Coca-Cola for a while. I like to buy closer to that 52-week low, right around that $45 mark. You can see they've been climbing consistently. Back in January and February is when we were trading them a little bit heavier, and I think they can go as low as around $50 again, is probably where I'll want to re-enter something like a Coca-Cola. Now, they have a 3% dividend yield. Their market cap's absolutely huge. Their 52-week high and 52-week low. The stock doesn't fluctuate much, which is another great thing to see. And if you see a 6%, 8% dividend yield, that is a red flag to me. You have to consider, why are these guys giving away so much on dividend yield? Something like a Coca-Cola, you can see that in the last year, it's gained 20%. So it's still a great stock overall, even if it didn't have a dividend yield at all. It would still be a great stock. So the dividend really is just a bonus. Now, another dividend stock, this one's not too much of a traditional one, but I like this one, and I'm trying to load up heavier on this one, because even if it wasn't a dividend yield, I would still want to own Nintendo for long term. They're a great stock to own. But I would want to buy them closer to that $50, $55, even $60 price point is a lot more attractive for me. You can see I have 9 shares at an average cost of $69 per share. We're up 2%. I want to lower my average cost. They only have a 2% dividend yield, which is still good. You know, that's going to beat inflation. That's going to beat savings account. And you're investing in a great company at the same time, is why I like dividend yield. Dividend investing is exclusively for long-term traders as a bonus, because you have to wait a year to get a 2% dividend, 2% gain on your money, right? Same thing with any yield, 4%, 6%. You have to wait a full year to actually get those dividends. Now, not saying that you have to wait a full year for the payout, but to get the full 2%, you have to wait a full year. Some dividends pay monthly, some dividends pay quarterly, but they divide that dividend yield up quarterly. So if it's 2% a year, they'll divide the 2% over quarters, for example. If it's a monthly, they'll divide it by 12, and they'll pay that 2% divided by 12 and pay once a month. So remember, dividend yield is once per year, even though some of the companies pay out monthly or quarterly. So in my opinion, you shouldn't be focusing solely on dividend investing, but if you're looking for safer investments, if you're looking for longer investments, and if you're looking for something that's just going to grow consistently, not going to break the bank, and not going to give you you're not going to become a millionaire by investing in dividends. But if you're looking for something that just gives you a steady 5%, 10% gains per year, included with the stock price gains also, then dividend investing might be for you. Another great one is J&J. Now, they've had a lot going on with the vaccine, but before the vaccine happened, they were one of the best dividend stocks in the game. They're very consistent. They are definitely a flagship for dividend investing. They're only a 2.4 dividend, but their stock gains pretty consistently. So you can see they've gained 18% in the last year, right, with a 2% dividend. Would you rather have a dividend stock gaining 18% a year, paying you 2% dividend? Or would you rather have a dividend stock that's only gaining 1%, 2% per year, but they have a 6% dividend or an 8% dividend? So you can actually see why it's more important to focus on the stock's fundamentals and how much it's gaining on the stock price first, and then look at the dividend as a secondary bonus, okay? So the dividend is really good on this one. It's a very safe stock. That's why people like to invest in something like a Johnson & Johnson. It's almost like investing into an ETF or the S&P 500 at that point. You know you're not going to lose your whole account. You know the risk is very low and the reward is going to outweigh the risk. So Johnson & Johnson, Procter & Gamble, Coca-Cola, these ones have been performing consistently for decades now. Decades and decades, paying a dividend consistently. So when you are looking at dividend investing, you also want to check to see if the dividend is active, and you want to see what they've been paying in the past, because people can change their dividends at any time, right? So you want to see if they're consistent dividend payers for the last few years. So you want to check their dividends. What are they looking like for the last few years? Have they just recently started paying 6%, 4%, or have they been paying 4% for a long time? And you also want to look at the stock in the last 5 years. How has it performed overall as an asset? So those are all important things when looking at dividend investing. I have more dividend stocks that I want to talk about too. So if you want to see a part 2 of this video and for me to talk about more dividend stocks, just comment below, hit the thumbs up button, share this video with a friend, and I'll make a second part of dividend investing. Also, I did a poll on my Instagram to see how many of you guys liked dividend investing, and it was like 50-50. It was pretty much split. So I know some people do, some people don't. Some people think it's a waste of time. It pays very slowly. You only get like $1, $2 dividends at a time, but it adds up over a long time, and you have to take into everything that we talked about into consideration about it being a safer investment and not as risky. So you can see in the last 3 months, we're up 16%. The last year, we're up 66%. We're in a little bit more of a downswing. So right now is a time to be buying a little bit heavier. In the close friends group, we kind of slowed down our buying, but we want to start speeding it back up in next week here, especially if we start seeing more dipping and more dipping. Remember, when it's dipping, that's the time you want to buy. And when everything's really oversaturated, that's the time to be selling. So if you look at some of my older videos, I only had like 2,000, 6,000 in buying power. Now I have 30,000 in buying power. So we're going to get to that point where we're going to start buying more as stocks keep going down. So smash a thumbs up if you want to join my close friends list and see exactly what I'm trading. DM me on Instagram. I actually post when I'm selling, what I'm selling, how much I'm buying, when I'm buying, what stocks I'm buying, so you can see and get access to all my trades and my watch list. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.